Welcome. In this video, we will analyze, can XCN coin suddenly come an upswing? We will analyze it. Don't forget to subscribe, like, and please watch till the end to understand. When we look at the chart from a broader perspective, a highly notable and potentially significant technical formation stands out: the falling wedge pattern. This structure is especially known as a signal for trend reversals and is one of the powerful patterns closely monitored by investors. The current formation of this falling wedge on the chart indicates that price action is compressing, but this compression may be followed by a significant directional breakout. The main feature of this pattern is the narrowing price range over time, with the potential for an upward breakout from this tightening structure. And based on the current outlook, this potential carries a highly positive tone. Falling wedge formations generally appear in the final stages of downtrends and indicate that price is starting to compress under pressure. Although it may initially seem like a bearish formation, most of these patterns result in upward breakouts. This tells us that while market participants are still trying to push the price down, the selling pressure is gradually weakening and buying interest is gaining strength. In other words, sellers are getting exhausted and buyers are starting to gather momentum. This is a very positive signal from a technical analysis standpoint, as this compression could be the precursor to a strong upward price breakout in the near future. Currently, price action is approaching the upper boundary of the falling wedge structure, and the probability of a breakout at this point is increasing. The upper band also represents the most critical level of the formation, and a breakout above this level could initiate a phase where bullish trades gain even more momentum. In technical analysis, such compressions and resistance tests are often the starting points of major opportunities. Once the price accumulates enough energy, that energy typically releases swiftly in the direction of the breakout, resulting in a sharp move with strong volume. The current chart outlook is increasingly supporting this scenario. Falling wedge formations are significant not only in terms of price movements, but also in understanding investor psychology. While this formation is developing, there is often a general sense of uncertainty in the market, and many investors are unsure about which direction to take. However, this period is actually one of accumulation. Strong hands begin building their positions gradually and start accumulating at lower levels. Weak hands tend to lose their positions during this consolidation. This shows us that when an upward breakout occurs, major players will likely already be positioned, giving the market potential to enter a new bullish trend afterward. Additionally, looking at the structural integrity of the formation, we can observe that while the price is making lower highs and lower lows, the depth of these lows is decreasing. This is another technical sign that selling pressure is weakening. In other words, each new low is forming at a higher level compared to the previous one, indicating that buyers are becoming more decisive. This type of setup is very positive in terms of market dynamics because it signals that once the breakout occurs, the price is likely to move upward with strong momentum. Furthermore, the breakout target of this formation is clearly defined in technical analysis literature. In falling wedge formations, after the breakout, the price typically aims for a rise equivalent to the height of the widest part of the wedge. In this case, by measuring the base height of the wedge on the chart, it is technically possible to project the potential levels the price might reach after the breakout. And such target projections are extremely valuable for investors in developing strategic trading plans. But we cannot make decisions based solely on the formation. Let's take a look at other metrics too. Stay tuned. When we carefully and meticulously examine the chart, one of the notable positive structures that stands out is the ascending channel formation. These types of channels are very important technical formations that indicate price is moving upward over time in a steady and controlled manner. Currently, we observe that price action is following a very orderly path within this channel and responding respectfully to its boundaries. This tells us that the current direction of the market is upward, and that this uptrend is progressing with a certain technical discipline. In technical analysis, channel structures are highly valuable for observing whether a trend is progressing in a healthy manner. And from this perspective, the current structure appears quite promising. An ascending channel consists of two parallel trend lines sloping upward, showing that price is trending higher. The lower band acts as support, while the upper band serves as resistance. The price oscillating between these bands is a sign of a healthy uptrend. While the market moves within this channel, every pullback becomes a buying opportunity, and every rise offers a reasonable moment to take profits. Currently, the price has pulled back to the midline of the channel. Midlines typically act as balance points within a channel. The fact that the price is trying to hold at this level clearly shows that buyers are active, and this zone is functioning as support. This middle area of the channel is also a strategic zone where market participants often resume buying. In strong uptrends, price doesn't always drop all the way to the lower band. Sometimes the midline is a sufficient level for a correction, and from that point, price resumes its upward movement. Therefore, the fact that price has come to this zone, paused, and is displaying horizontal movement gives quite positive signals. Each new low forming at a higher level than the previous one also confirms that the uptrend is building on solid ground. If price gathers strength from here and gains upward momentum, the next target would be the upper band of the channel. This suggests a significant upside potential from the current price level, and this potential not only implies a short-term rise, but also the continuation of the trend. In ascending channel structures, moves toward the upper band are usually supported by strong volume, which helps make the price movement more decisive. This lays the groundwork for new highs. Each successful touch of the upper band may lead to an update of the channel structure and cause the channel to expand upward. This is a very encouraging and opportunity-rich development for investors. On the other hand, the highly consistent and systematic nature of price movement within the channel shows that the market is currently progressing in a controlled manner and staying away from sudden and unrestrained drops. This is another important factor that boosts investor confidence. In technical analysis, a sustainable trend structure is made possible not by sudden moves, but through stable oscillations within the channel. And the current chart structure clearly displays this stability. At this stage, the fact that the price is trying to hold at the midline and the possibility of an upward bounce from this region can be evaluated as a highly positive technical signal for investors. If an upward move begins from this area and is supported by volume, both momentum and market sentiment will shift entirely to the buying side. The ATR indicator is an extremely valuable tool in technical analysis used to measure price movement, or in other words, volatility. Thanks to this indicator, it's easy to analyze the average price fluctuation range of an asset over a specific time period. When we carefully examine the chart right now, it is clearly observable that the ATR indicator is moving at relatively low levels, which shows that the market has taken on a calmer and more controlled structure in the short term. While some investors may perceive this situation as inactivity, it can actually be a precursor to a larger and stronger move. In financial markets, periods of consolidation are often followed by sharp and directional movements. This is precisely why moments when ATR is low provide important signals for upcoming volatility. The current low level of the ATR indicates that prices are trading within a certain band in a narrow range, meaning the market is essentially catching its breath and gathering strength. During these times, buyers and sellers are usually balanced. There is uncertainty about direction in the market, and investors tend to wait for the next big move. However, this situation is not permanent, because by its very nature, volatility constantly changes, and every period of low volatility is followed by a period of high volatility. In this sense, the current low reading in the ATR is actually an indicator of accumulated potential and should be interpreted as a preparation for strong price movements in the near future. The ATR indicator must definitely be considered. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.